Good morning, ladies and gentlemen, and welcome to the show. I'm glad to have you guys here on this Wednesday, the 24th of June, 2020. Welcome. Listen, let's get started right away. Let's open up the charts right here and take a look. The stock market, uh, it's fallen right now. It's extending its losses today on market woes of tariff woes and virus woes and everything else. But here's the thing, guys. I've been on alert on my channel for a market drop, for a few weeks now. And it been a market watch like a tornado watch for the market to drop. It looks like we might be getting started in the drop that I've been waiting for these last several weeks. And the market right now today has dropped off 727 points quite suddenly. Now, I'll tell you the position the Fed's in right now. They've quite literally done everything. They've thrown everything but the kitchen sink at the markets and at the world, at the economy in general, to try to prop the economy up. And they're in a position right now where they're sitting back thinking to themselves, maybe we did too much. Maybe they want to haul back a little bit and not do as much. So they're going to be very hesitant now, the Fed is, to do more stimulus and more and more and more. They're going to be a little bit hesitant right now, especially in support of these markets. And here we got a market that's dropping like a stone. 698 points down today so far. I think we might be looking at the start of something really, really big here in this market drop. We'll have to see if it continues. If it starts to continue the next few days, or during the next week, and it continues to drop really fast and steady, then that's going to be putting pressure on the Fed. A lot of pressure on the Fed to do something. But at the same time, they've already done so much, they're thinking to themselves, gee, do we really want... I'm going to tell you, the market right now at this point is positioned so that it could drop so far, so fast, it could amaze you. It could amaze you how far it could go and how quick. If we take a look at this market top, let's focus in on this. Let me get the charts right in and focus in on this market top. And what we're looking at here is classic. This is called a dead cat bounce. What happened was the market fell down to let me see, where's the bottom here? It fell down to 19,173, roughly around. I think it was around 18,000. And now we've made it all the way back up in this bounce to what was it, 26,800, or even a little bit higher, 27,000. We made it all the way back up. This is classic if you study charts. This pattern right here is very classical. And it represents, and if it follows true to the pattern that is a classic pattern for markets, this is what's called a dead cat bounce, where the market comes back up almost as high as it was before, and it's a return to normal and everybody feels good again, But look out, because it's ready to collapse. The market's ready to collapse down to lows. I mean, if the Fed were to do nothing right now and just watch this thing collapse, there's no telling how low it could go, But at the same time, there's a lot of money to be made in this. And I'm going to tell you how the money's to be made. If this is right, if this is a dead cat bounce and we get a major fall in these markets, there's going to be a point where the Fed comes in. They step in. They say, hey, you know what? Even though we've done as much as we've done and we've supported, we're going to move back in and do more. And I think that's exactly what will happen if this market falls too far. The Fed at a certain point is going to hop in and say, we're going to do more. Now, if you can time that point where the Fed's going to hop back in and support these markets, and you can buy in at the bottom, you're going to do really, really good, you know? And that's the thing, is timing it. How low will it go before the Fed capitulates, really fully capitulates into this market? Will it go down to 15,000? Could it go that low? You know, it wouldn't shock me. It really wouldn't shock me if this market went all the way down to 15,000 and then the Fed stepped in and with more. If you could buy in at that lowest point, well, you'd be doing, let's just put it this way, you'd be doing rather well. If you could know that lowest point. Now, I'm going to be watching this thing very carefully, and I'm going to have my ideas when it hits its lowest point, you know, and the Fed starts stepping in, you know. I got my ideas about that. We're going to see how it plays out. But now there's another big thing going on right now with silver. You know, here's the silver price today. We're looking at $17.52, down 43 cents on the day. Silver market is ready to break. There's not enough real physical silver to go around, you know? And these players, big players like JP Morgan, they're dropping all the short positions. JP Morgan is. They're almost fully long silver now at this point. They know what's coming. A real physical silver shortage is probably what's on the cards, because there's not enough to go around. The mines are producing much less than normal. That's an understatement that they're producing much less than normal, because, you know, most of the silver, like 80% of it, it's like a byproduct of things like copper, aluminum, lead, zinc, tin, all these different base metals, right? And, you know, there's no demand right now because there's no, you know, they use a lot of copper when they build new house and stuff like that. You know, I mean, as far as the world is concerned, there's not a lot of demand for these base metals right now. And so 80% of the silver comes from base metal production. And I mean, the primary silver mines out there, you know, they've been shut back, and like at least 30% less than normal, you know. We'll be lucky this year if we get 600, maybe 700 million ounces out of the ground on the table for silver. Normally, you know, we get over 800 million ounces. There's a shortfall right there. You know, right now they're trading like 600 million ounces a day in these paper short contracts, you know. And the thing is there's no underlying asset. It's in short supply. It's hard to obtain. Soon it might be impossible to obtain, you know. And yet we see the price going down 44 cents today. That's because they're trading these paper short contracts that have no underlying metal behind them. All they are is a big pile of paper. That's not going to end good. I'm telling you, and it's going to come around soon, too. I'll tell you honestly what I'm expecting. I'm expecting $5,000 gold. Now, I'm not talking about 10 years from now either. I'm expecting $5,000 gold and silver at a 40-to-1 ratio to gold. So you can look at $125 silver. You know, that's what I'm expecting. And I'm not expecting it way off in the distant future either. I'm expecting it only in the next couple years, you know, or less. Maybe even this year. Maybe toward the end of this year even. I mean, it's just the way it's going. Cryptocurrency today, 264 billion. So cryptocurrency's lost a little bit today. Let me refresh the page. 264.9 billion with a Bitcoin dominance of 64.7%. And a Bitcoin price of 93.03 today. Let's take a look at the Dow Jones, 761 points down. This could really roll over big in the next couple weeks. Really. And at a certain point, the Fed's going to step in. Timing that is everything. If you buy into this market just before the Fed steps in, if this market drops down to like 15, it wouldn't surprise me. Drops down to like 15,000, and you time it right, and you buy in when it's at its lowest ebb, and then the Fed steps in and starts propping it back up, there's no end to how high this market can go. But you got to understand, all of your winnings is going to be in dollars. And we're at the front side right now of a crack up boom. A monetary experiment that's went on for the last 105 years or something, about something like that, is about ready to come to an end. And if you want to invest in that, it's like investing in Hertz, a bankrupt company. It's the same deal, Anyway, let's take a look at the stock market. No, we're going to take a look now at oil. Crude oil today, 37.51. It's down 2.86%, or 0.708% on one day alone. That's a pretty big drop for crude oil today, and when we see the crude oil price start to drop quick like that, we know that there's problems now in the market again, just like the problems we had before. That little rosy period we had, it might be coming to an end right now. Let's take a look at U.S. Treasuries. We're looking at the yields falling. It's 4 basis points on the 30-year, 1.44 on the 30-year, and the U.S. 10 years fell 2.2 basis points to 0.68. And now let's take a look at the dollar index, and we see the fear. They're running into the dollar as a safe haven asset. 97.05 today, and the dollar's back up again and moving higher. Really turbulent times right now. And dig your heels in right now. It might be a good time to, if you've made a good profit on stocks, it might be a good time to, take a little bit of money off the table or whatever, and right now, and then buy back in when she hits bottom. And that's the thing, is timing that. When it hits bottom, that's the thing. When it hits bottom. And I don't think we're there yet. I don't even think we're close. I think this market could drop a long way right now, and it's going to force the Fed's hand. They're going to come in. They're not going to let this market completely collapse. They're going to, at what point will they step in? This is an very interesting thing to sit on the sidelines and watch, Thank you guys for listening to the show. Like and subscribe. Remember those thumbs up. We'll catch you guys tomorrow. Bye-bye.